Joining me today is Nolan Watson from Sandstorm Gold. Nolan, thanks for joining us.
Hey, thanks for having me.
Let's start off maybe talking a little bit about the gold market. I see that you founded Sandstorm back in 2008. I'm curious if the words quantitative easing was a part of that thesis.
Well, I've been a believer in precious metals for a long period of time. I've been in the precious metal industry my entire career. But I would say that the primary reason for starting Sandstorm is more to do with the fact that, given the fact that I'm bullish on precious metals, I love our business model, which is it allows us to diversify. We've got royalties all around the world. We get the best upsides of price upside, exploration upside, with mitigating a lot of the downside risk. And so that was the thesis. That's why I wanted to start the company.
So this is the first time we've had you on, or anybody from Sandstorm. What's the high-level overview of the company?
Yeah, so it's a company that we grew from absolutely nothing to, we're about a $1.6 billion market cap today. We're a royalty and streaming company. So that means that we have royalties on other people's mines around the world. So we're here at a conference here, we're walking up and down the halls. And there's a whole bunch of people that cut us checks every month for royalties, or if they build their mines, they'll owe us checks. And so we've got about 240 streams and royalties around the world. Our cash flow is $100 to $150 million a year, ramping up to about $250 million a year US after tax, based on things that we already own, that we've bought and paid for, and or things that we have the right to buy. So it's a fun place to be.
So you started this company in 2008. Today you're at a $1.5 to $2 billion market cap. I'm curious, when you started this company out, how much capital did you start out with?
None.
Wow.
Yeah, we took over a shell company, had maybe $500,000 cash in the bank. And I would say for the first 10 years plus of running and building the company, one of the most challenging things was where do you get that capital? So often we would have to raise equity to go out and buy the things that we bought. One of the things that I'm really excited about my job now is that we've built the company to a point where we've got enough cash flow coming in, and that cash flow should be almost doubling over the next 5 years from things we already own. We don't ever have to raise equity again. In fact, we're doing the opposite. We're at a phase of the company where we're paying down our debt and we're buying back our own shares at the same time. We're at this conference. We're the only company here that's actually shrinking our share float instead of expanding it. So that's why I'm excited about the next phase of the company.
So when I look at your share price performance over the last year or the last 5 years, you've had a good 1 year, but the last 5 years have been sort of flat. We've seen gold go from what was it, like 1,400-ish to 2,400 today, and that's not being critical of you guys. That's very common amongst some of the best gold names, not just here, but on the big boards. Why do you think that we haven't seen the gold price reflect into the gold equities?
Yeah, I think there's one main reason for that generally in the industry, and then a secondary reason as it relates to us specifically. The main reason for the industry is that the driver of the gold price has been China buying, people in China buying, India buying, people in India buying, the rest of the world buying. Those institutional investors and those central banks buy gold, and they don't buy gold equities. Yeah. It's actually been a net liquidation of gold equities, as well as a net liquidation of gold out of ETFs. If you look over the last 14 months, 12 months in a row was net liquidation by institutional investors of gold out of ETFs. And it's those same institutional investors that have been liquidating gold equities. It's just in the last 2 months that institutional investors have become net buyers of gold. So you've had the international central banks buying gold, you've had institutional investors selling gold, and that's been putting downward pressure on all of the gold companies. If you look at Sandstorm specifically in the last 5 years, for the first 2.5, 3 years of that, we were issuing equity to buy things. In the last 2 years, we've reversed that. We're now buying back our own shares and shrinking our share float. And that's why you've seen our share price start to re-rate, and I think our share price is going to continue to re-rate. So I think Sandstorm investors have two things to look forward to. One is as we continue to shrink our share float and drive our share price higher, but also the fundamentals of gold price has gone higher, but all of our equities, including Sandstorm's, really haven't kept up. If you look at just today's gold price and you assume it stays there without any further increases in the price of gold, all of the companies here, including Sandstorm, but especially Sandstorm because we don't have to issue shares, our share price should be much, much higher than where it is today. And I think it will re-rate as people come to the realization we are in a new paradigm for gold.
What's the big revenue streams that we're sort of looking at if we're a shareholder just trying to high level understand where the cash flow is coming in? What are the mines that they're coming in on?
Yeah, so there's sort of two parts. What is cash flowing for us today? Yeah. And then what is going to be coming in online and cash flowing for us sort of over the next 4 to 5 years? What's cash flowing today is things like Equinox just built their Greenstone mine. We just started getting checks from that. We've got streams on Chapada, which is a Lundin mine. That's one of our significant streams. Cerro Moro is one of our significant streams that's delivering. We've got, almost 30 plus streams and royalties that are paying. We're getting checks every single day. Like I said, our cash flow should be, over $100 million free cash flow after tax here this year. But if you look over the next 5 years, we've got the ramp up of Greenstone coming. We have a Robert Friedland and Ivanhoe Mines. They've just built a mine, or almost done building a mine called Platreef. We have a big gold stream on that. We should start getting gold from that next year. Barrick's building their Robertson mine. We have a royalty on that. We bought and paid for that. Hod Maden is a mine that's one of our best assets that we expect to go into construction probably next year sometime. That's going to be one of our biggest streams. It's about 12% of our NAV, and that'll be about a 3-year build. And then we've got the right to acquire a 20% gold stream on Glencore's Mara mine, and that's going to be about $30 million of cash flow per year once that gets built and up and running. So we've got lots of cash flow now, but we have all of these 5 things happening. We'll be getting a lot more cash flow in the future.
How would you compare Sandstorm to Franco-Nevada? Is it a pretty similar model?
It's a very similar business model. Yeah, I would say that we run it relatively similar to Franco-Nevada. What I would liken us to is Franco-Nevada 14 years ago. Yeah. When Franco-Nevada got started was right around the time that I was starting up Sandstorm, and they were about our size then. And so our goal is to continue to grow the company methodically and grow into becoming a major eventually.
Yeah, well, it's a great story to be digging deeper into, and we'd love it if in the future we could sit down and go deeper into the company, because I think that from an equity analysis standpoint, this is just wildly fascinating. You're avoiding dilution risk, you're getting your torque in the commodity. I feel like we could have a whole deep conversation on how you do deal making, because 30 cash flowing assets is not anything to shake a stick at. That's very impressive.
Yeah, no, appreciate it. Thank you. Look forward to it.
Thanks very much for joining us, Nolan.
Yeah, thank you.